All right, Jim Rickards about the aftermath of the current depression. Now, this comes from, I believe, Reinvent Money. Um, and this interview is a really great one. I definitely recommend checking it out. I'm going to link it in the description below, as always, where I leave all my sources. Um, Now, Jim comes up with a new shape for how he thinks this recovery or this aftermath is going to look. And this is pretty new. I've never heard this before. So let me read this quote and get right into it. Oh, but before we begin, if you're new, please subscribe to the channel. Please like the video to get this economic evangelism more out there to the masses. And let's jump right in. The question is, where do we go from here? Is this the famous V-shaped recovery where it goes down and comes back up again? And by the end of the year, everyone's celebrating Christmas and it's all good. Or is the L-shaped recovery where it goes down and it doesn't go down further, but it doesn't go up a lot. Either we just sort of hover along at a lower level, but unemployment remains high and growth remains weak, etc. My view is that we are in shape for the L-shaped recovery. It will be years before the US gets back to 2019 levels of output. Now, with this quote that I just read, the etc. part of his quote raised a flag for me because after or before he said etc., he said he basically sees an L-shaped recovery happening where unemployment remains high, growth remains weak, etc. To all the Americans watching, what does that sound like to you? The 1970s, except he left out heavy inflation. Now, he has called for um, hyperinflation after a deflation. So I'm sure that's what he meant to say, substituting that, etc., for the inflation. Um, I know I've called for stagflation. Ronnie Stoffele as well as called for stagflation of the famous "In Gold We Trust" report. In the past, I've thought about the U-shaped recovery being the best after this, deflation. The best case scenario, it was the U-shaped recovery. Danielle DiMartino also has called for that. In the worst case scenario, I called for stagflation. I just had no idea that we could call stagflation an L-shaped, form there. I've actually never heard of the L shape, so that's a new one for me. I've heard of V, I've heard of U, but the L shape is new for me. So why low growth? So we are expected to hit a debt to GDP ratio in the United States of 110% by the end of 2020. And I believe that's according to Trading Economics. Now, there is a study done, a really famous study by some Harvard economists, and basically it was done around, I believe, 2010. And basically what they found was that countries, and this is based on data set from as far back as the 1800s, looking at hundreds of economies of various types. And what they found was that if any country hit a debt to GDP ratio of 90%, you would then sort of begin to see slow to low growth. And the funny thing about the US, well, not really funny, but since 2010, we've been in that 90% territory, and we've only grown. We were around 90% in 2010. I believe we were around 80-ish% in 2009, and then in 2008, I believe we're at 60 something. So we just jumped to 90, and we've been going up ever since, and we're projected to hit 110. Right now, I believe we're at 106. So we're projected to hit 110 by the end of this year. So with our high unemployment, we're getting close to a fifth of the U.S. being unemployed. with our all the money printing that's happening right now. After this, minor deflation that we're going to be seeing, because right now we actually have negative real interest rates. There is a little bit of inflation there, but it's slowly going down. So definitely expect to see like a little bit of actual textbook deflation. You know, but after that's done, you're gonna see money being sloshed around. Why? I believe the type of inflation we're going to have is going to be cost push inflation. We're going to have a lot of supply chain issues. We're going to have a lot of people who are, the cost of labor is going to be really high. A lot of businesses are just going to be out of business because of that, and prices are just going to spike. So I see a lot of cost push inflation happening while there's a lot of low growth. And I see negative real interest rates happening during that period of time. Now, all that should spell to you gold going up. And if you saw my previous video about the Gallup sentiment, during that time, there's low growth. Obviously, you're not going to see the Dow recover very quickly. In that Gallup poll, I'm sure the rating of best long-term investment is going to go down for stocks and mutual funds. I definitely see real estate going down, but not as drastically. I think we're going to have to wait a little bit before that happens. But I do think we're going to see gold shoot up a little bit more as far as where people think the best long-term investment is going to be, because we're going to see the gold price go up. But let me know what you guys think. Do you guys think we're going to have an L-shaped recovery? Do you think it's going to be U-shaped? Do you think it's going to be V-shaped? Let me know in the comments section below. Please give this video a like. Please subscribe if you're new. And thanks again. It's Black Bullion.